Hey guys, it's that Dividend Guy coming at you with another dividend investing video. Happy Wednesday. Hopefully everybody had a great green day in the market. I hope everybody made some money in the stock market today. You know I always wish the best for my viewers and subscribers. Speaking of subscribers, if you haven't yet, go ahead and hit that subscribe button and that bell icon so you stay updated, so you get my updates Monday through Friday. I do portfolio updates every single day of the week. With that being said, let's jump right in. Let's take a look at the overall portfolio performance, the individual stock performance, my watch list, and my growth stock picks. So today we are down about $169. For the week, we're down $378. The month, we're down $846. 3 month mark, we're down $1838. For the year, we're down $998, and all time, we're down $234, down 1.15%. Not terrible. There's been a lot of fluctuation in the market. As you guys can see, I was all the way up to about 23K, and now we're down to 20. So the fluctuation in the market just means that there are deals. Red days are days that we should buy. Green days are the days that we should stay away. So with that type of psychology, that's the point of dividend investing, is buying low and never selling. I know they say buy low, sell high, but we want to buy as low as possible so we can rake in that high dividend and just keep using that to reinvest into other shares. So as you guys can see, I have $16 of buying power that's staying in the account. We're going to jump right in to the individual holdings, starting with one of my personal favorites, Dividend Aristocrat Realty Income. We have 15 shares, about $895 of market value. $45.38 is our average cost. 4.43% of the portfolio is in Realty Income. We're up to $14.50, up 31.5% on Realty Income. Then another dividend status stock, Dividend King in Altria, 149 shares, $5,700 of market value. Average cost is $43.61. About 28% of the portfolio is in Altria stock, down 770, down 11.8%. Not worried about it. It's a great dividend payer for this set of months, and it's increased its dividend for 50 years. Next, another Dividend King quality stock here in Coca-Cola. We have 20 shares, about $1,000 of market value. Average cost is $51.26. About 5% of the portfolio is in Coca-Cola, down 30.10, down about 3%. Not worried about it. This is one of those quality kings that I will keep adding to it as long as the price is below my average cost, which would mean right now I would love to add to Coca-Cola. Next, we have FRT, another Dividend King, a quality REIT, the only REIT that is a Dividend King on the market. We have one share, 73.77 is our market value, 113.40 is our average cost, 0.37% of the portfolio is in FRT, down about $40, down 35% on this. But again, if you guys look at the average cost, we are down about $40 from our purchase price, and we are down about 50% on the stock overall, which means that we have a lot of upside. So if I bought one share now, my average cost would drop down by like $40. And if I bought two shares, then my average cost would be around $73.77. So this is one of those really rare opportunities that if I bought more, if I cost down average, I'd have a huge decrease in my average cost, which means that my yield goes way up as well. So this is one of those that if I had the money, I would be pouring money into FRT. This is the stock that I would be buying for this set of months. I know I said Coca-Cola is my goal stock, and it is. I do want to have dividend deficiency with Coca-Cola, but sometimes the deals that are presented through the market fluctuations, we call it Mr. Market, sometimes they're mispriced, and sometimes stocks just get pummeled, and when they do, you have to jump on those opportunities because they're rare, which is exactly, in my opinion, which is exactly what FRT is right now. Next, on to the next set of months with Lowe's, a quality Dividend King. They've raised their dividend every year since 1962. They have a 50-plus year streak of increasing dividends, and this year they increased the dividend by 9%. So I'm very happy to own Lowe's. I just wish I owned more. We have two shares, $350 for market value, $186 for an average cost. 1.7% of the portfolio is in Lowe's, up $146, up $72.52 for Lowe's stock. AT&T, wow, they got slammed. $26.68. We have 126 shares, $3,300 of market value. Average cost is $29.68. 16.5% of the portfolio is in AT&T, down $377.95, down 10%. This is a great cost on average opportunity and one of my absolute favorite stocks on the entire market. This is my favorite stock for this set of months. So being down, I'm not worried about it. In fact, I get paid enough in dividends right now to buy two shares of this company, but the way I choose to invest, I wouldn't reinvest into the same stock. I reinvest into the next month's stock, which means AT&T and the other companies that pay me dividends will be buying something like a J&J, 3M, Exxon Mobil, Walgreens, or Aflac, or Black Hills. They buy next month's stock. So I'm happy that AT&T is down, but since last month, this month Altria paid, but it didn't pay enough for me to buy AT&T because it wouldn't add to my dividend income. I added PBCT instead. Speaking of them, they are a Dividend Aristocrat quality bank stock here. 13 shares, 137.28 on market value. 10.80 is our average cost. 0.7% of the portfolio is in PBCT, down 312, down 2.2%. I am looking to add to this. Of course, AT&T is my goal stock. It's the one that I will be focused on. But dividends from Altria, if they don't line up with buying AT&T, will be put into PBCT, into People's United Bank, because it's a quality bank. It's a Dividend Aristocrat. I love the dividend for the price, and it doesn't take that much money to be dividend efficient. Next, we have my biggest payer for this set of months in AbbVie. We have quality Dividend King here. Excuse me, Dividend Aristocrat. I think it's close to King status because it's spun off of Abbott Labs. So a lot of people use Abbott Labs increase history for AbbVie, and other people say it's only been like 7 to 10 years because of the spinoff, depending on how you want to slice it. But we have 60 shares, about $5,000 of market value. Average cost is $72.22. About 25% of the portfolio is in AbbVie, up $650, up 15%. And we have a 70/80 dividend coming in on November 16th, which is great. Next, we have 36912, starting with the quality Dividend King in J&J. We have 2 shares, about $290 for market value. Average cost is $135.80. 1.43% of the portfolio is in J&J, and we're up 17.14, up 6% on J&J. Then we have another quality Dividend King in 3M. We have 2 shares, about $340 of market value. Average cost is $147.28. 1.7% of the portfolio is in 3M, up $45.33, up 15.4% on 3M. Then Exxon Mobil, we have 84 shares. It's a Dividend Aristocrat, and it's down pretty heavily, which is exactly why I wanted to get into oil. But we have 84 shares, $2,700, almost $2,800 of market value. 53.20 is our average cost. So just like I said with a couple of the previous ones, a huge cost down average opportunity here. Just like FRT, too good to ignore. So I know my goal stock is Aflac, which is later in the portfolio, but this is just too good to pass up. So with an average cost of $53.20, I could drop $20 off of my average cost with every share that I buy. We have about 14% of the portfolio in Exxon Mobil, down 16.80, 82.79, down about 38% on Exxon Mobil. Then we have Walgreens. We have 6 shares, a Dividend Aristocrat. They're close to King status. We have 6 shares, $223.50 is our market value. Average cost is $39.92. 1.1% of the portfolio is in Walgreens, down about $16, about 6.68%. Not worried about that. It's a good quality Dividend Aristocrat that will reach King status here pretty soon. Next, we have Aflac, which is my goal stock, but as I said, with FRT, I would love to switch that if the deal is good enough, which, in my opinion, FRT is good enough, and so is Exxon Mobil, so I would rather put the money into Exxon Mobil, given that Aflac's $37 and it pays 28 cents a share, versus Exxon Mobil, which is $33 and it pays 87 cents a share. So for a dividend to price ratio, Exxon Mobil blows Aflac out the water. So we have 1 share at $36.98 is our market value. $35.75 is our average cost. 0.18% of the portfolio is in Aflac. We're up $1.23, up 3.44% on Aflac. So for the portfolio, guys, within it, I would say FRT, AT&T, and ExxonMobil are the shining buys right now. 100% if I had the cash, those are the 3 that I'd focus on. Next, we have the watch list, which I'll just say buy or not, if I would buy or not, at $63.80. Sysco is a steal, and it's a Dividend King. Pepsi is also a king at $139. I'm not touching it. It would need to go down to about a $130 level for me. But this is one of those, most of these stocks are ones that I just have to bite the price and just buy into it because they're such quality stocks that they don't generally go down. Kimberly-Clark is the same way at $148. About $12 of upside. I like 15, so not quite enough for me to buy, but we're getting close. If it gets down to like the $142 range, I would buy it. Colgate at $80 is one of those that I'll just bite the bullet, buy the stock. Even though it's close to 52-week highs, I can still buy more than 10 shares of this quality Dividend King, and it will compound over time. So Colgate's one of those that I would just buy it to buy it, regardless of the price. Next is Procter & Gamble at $142. I'm not buying it here. The reason Colgate is an exception and Procter & Gamble is not is because Colgate actually is is a better price to dividend ratio than Procter and Gamble is. So I would bite the bullet on Colgate because of the price, because I can buy more shares versus Procter and Gamble. So I would need Procter and Gamble to get down to like a $130 level before I bought it. Next is Essex Property Trust. Below 300, it's a steal. So, of course, below 200 is a definite buy for me. So, this one's the glaring buy in the portfolio right now. Black Hills at 57.87 is the high, $30 of upside. I want 15, so this is well in my parameters for buying, and I'm hopeful that I can add it to the portfolio here relatively soon. Next is Mickey D's at 226. This is just like Pepsi. It's a quality stock, real estate play. I'm just going to have to bite the price and cost down average over time. So I would definitely buy McDonald's here at any price. According to my metrics, I'm not touching it at 226 because it's only about $5 of upside. I would need it to be down to like a probably 218 or so, 215. But I would definitely buy it right now just so it could be in the portfolio. Next, in the growth stocks, Apple at 116, I would buy it. I love the CEO, love the culture, love the product line. I don't really have anything bad to say about Apple, to be honest with you. It's my favorite stock in the entire stock market. So I know it's not in my top 5 dividend stocks. I don't look at this as a dividend play. I look at it as a growth play. But this is for any company that I'm loyal to, and I love. It's definitely Apple, followed by probably the second place, Disney. I love Disney. Everybody grows up with Disney. Warren Buffett is bullish on Disney. He said way back years and years ago in the 2000s that there's a difference between Disney movies and other companies. So there's a difference between DreamWorks and Disney or whoever else you're going to put it versus because Disney has that moat. Disney has that, like when you say Disney, something pops in your head, right? And that's how it is for everybody. Every kid's raised on it. Every kid grows up with it. It's something that parents have passed on to their kids for generations. So I want to be a part of that culture. I want to be part of that history, and I do want it in my portfolio. They did cut the dividend, which did make me sell it, but at this point in time, I really don't care if it pays a dividend. I'm looking at it through a different lens now, and I just want it in the portfolio. So Disney's definitely going to be added there. My original goal was to use Disney stock to pay for my Disney Plus subscription, which would take like 23K, which in time I'll be able to do, but it'll take a while. But since they cut the dividend, that's no longer the goal. But if they reinstate it, that will definitely be one of my goals for the long term for the portfolio is to pay for Disney Plus with Disney stock. But with that being said, guys, the glaring buys for the portfolio within the portfolio are FRT, AT&T, and Exxon Mobil. The glaring buys on the watch list are Sysco, Essex Property, and Black Hills, and I think both Apple and Disney could be added to the portfolio right now, and they're at healthy prices where I could sleep easy at night. With that being said, guys, thank you so much for watching. Remember to hit that subscribe button, and when you do, hit the bell notification on my channel, that dividend guy, so you can stay up to date on all of my portfolio updates. I'm going to try to get some more news-worthy stuff out there. I have like a DirecTV with AT&T's DirecTV deal. I have a couple Apple videos I have planned, so I have more content coming out, guys, so you definitely want to subscribe and hit the bell notification so you don't miss any of that stock market news on top of the portfolio updates. So thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.